Hey everyone, welcome back to Corporate Decoder, the place where we decode all the business mumbo jumbo. Today we're diving into a report that promises health and future, but maybe it needs a financial doctor of its own. This report gives us a peek into the numbers of scientist Home Future Health Limited. They sell health supplements and topical creams, and we're going to see how healthy their business really is. It's an important report that all companies need to provide so that investors can stay informed and know what's going on with their money. If you appreciate getting straight insights from corporate documents, make sure you're subscribed. We also have a Discord community linked in the description below. Now let's get started. First things first, this is a 10Q form, which is a quarterly report that public companies file with the Securities and Exchange Commission, or SEC. Think of it as a checkup that public companies must have every 3 months to keep investors informed. This report is for the period ended March 31, 2025. Scientist Home Future Health Limited is a company based out of legally Nevada, but their principal executive offices are in Hong Kong. As of May 15, 2025, they had a little over 23 million shares of common stock outstanding. This number is important because it's used to calculate earnings per share, which is how much profit a company makes for each share of its stock. Now, let's dive into the financial statements starting with their balance sheets. The balance sheet is a snapshot of what a company owns assets and what it owes liabilities at a specific point in time. It's like a financial photo. Let's scroll to that photo. Looking at the assets, cash and cash equivalents, which is basically cash on hand, and anything that can quickly be turned into cash, they had about $16,000 as of March of 2025, down from about $18,000 at the end of the prior year. This means they spent more cash than they brought in. Their inventories, which is the value of their health supplements and creams waiting to be sold, were only about $3,400. This is a small amount, meaning they don't keep much product on hand. Now, looking at the other side of the balance sheet, their current liabilities or short-term debts were about $19,500. This includes things like accounts payable and amounts due to related parties and directors. Total liabilities and stockholders' equity are almost identical, so there is little to no equity available to the company. Next up, let's check out the statement of operations, also known as the income statement. This shows how much money the company made and spent over a period of time. For the 3 months ended March 31, 2025, they had revenues of about $44,800. But their cost of revenues, what it cost to make and sell their products, was around $25,000. That leaves them with a gross profit, the money left after subtracting the cost of goods sold, of about $19,700. After subtracting selling, general and administrative expenses, which are the costs of running the business, about $12,700, they ended up with an income from operations of almost $7,000. This means that after paying for what they sold and running the business, they made about $7,000 before considering taxes and other income. After paying about $900 in income taxes, their net income or total profit came out to around $6,000. Dividing the total income by the total outstanding shares, the net income per share comes out to almost nothing. This might be because the company is very young. Now, the statement of cash flow shows how money is moving in and out of the company. It's like watching the flow of water in a river. For the first 3 months of 2025, the company used about $4,800 in operating activities. This means they spent more money than they earned from their regular business operations. They brought in a little over $2,300 from financing activities, meaning money from borrowing. Overall, their cash decreased by a little over $2,400 during this period, bringing their total cash down to $16,000. Let's look at related party transactions. These are deals between the company and its executives, directors, or their close relatives. These transactions can be a bit of a red flag, so let's look at them more closely. The chairman, CEO, and director of the company, Chan Siu-hung, has a relationship with a few related entities. The company rents office space from one of these related parties, named Related Party A, for around $1,300 a month. They also purchase trading goods and courier services from another related party named Related Party B. This might mean Related Party B is their primary supplier. As of March of 2025, the amount due to related parties was about $6,500. Next up is risk. Public companies are required to talk about their biggest risks to keep investors informed. So what are the biggest risks to Scientist Home Future Health? The report notes that all the cost of revenues came from a single vendor. This means they rely heavily on this vendor for their products. If something happens to that vendor, it could disrupt their business. Let's examine segment reporting. The company has single reportable segment based on business unit, retail trading business, and 2 reportable segments based on country, Hong Kong, and non-Hong Kong. The retail trading segment derives revenues from customers by providing health supplements and topical creams. Finally, the report mentions that they've checked for any important events that happened after the period ended, but before the report was issued, and they didn't find anything that would require recognition or disclosure in the financial statements. Alright, that's our breakdown of Scientist Home Future Health Limited's latest filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.